Federal Reserve Chair Jerome Powell shared plans to speed up the central bank's inflation-fighting efforts. But the recent failings of Silicon Valley Bank could put that strategy on hold as turmoil in markets Monday suggests broader fears about financial instability and renewed fears of a recession. So Lori Bettinger is joining us now. She is the president of Bancalliance and the former director of the Troubled Asset Relief Program. Good to see you again. Let's talk about what we're seeing. What does the turmoil from yesterday's market suggest about broader fears of financial instability? Or maybe it doesn't. Maybe it's just, strictly focused on regional banks.
Good morning. I think what we saw yesterday was pretty limited to regional banks, and I'm optimistic that this turmoil around these sort of mid-sized banks is going to be short-lived. I think that right now the banking system, as we've heard sort of every policymaker say, is in really good shape. Banks are well capitalized. This isn't a repeat of the financial crisis. But, what happened with Silicon Valley Bank, I think anytime you have a bank run and then with Signature, it's natural for people to look around and say, hey, who else could be in this similar situation? But I think you had some pretty unique features with both banks. And, I'm not expecting broader contagion, which isn't to say that the economy doesn't feel unsettled right now, but I'm not sure how that's different from prior months. It feels like every month we have something new to digest.
Yeah. And so you kind of answered my second question, which was whether or not there would be other banks in a similar situation to SVB. And yeah, they were particularly vulnerable to these set of circumstances because they're the kind of bank that, helps to support a lot of businesses. And so less likely to have their funds protected, though, the federal government is stepping in and ensuring that. But let's talk about the Federal Reserve's interest rate hike strategy, because people have said, SVP would not be in this situation if it wasn't for the rapid hike in interest rates.
Right. And so it's, when we talk about interest rates, it's easy to talk about the effects that you can see, right? Maybe it's more expensive to buy a house because of mortgage rates. Your credit card rate is going up. But there are all these other effects that go through the economy that are a little subtler. And, you kind of see them when they cause huge problems. And what you had, right, with Silicon Valley Bank is the bank had grown really rapidly. They'd gotten a lot of inbound deposits from their customers and they had to find a place to put them. So they bought mostly government securities, right? That doesn't sound like a risky move in terms of credit risk, but that ended up being a lot of interest rate risk because as interest rates rise, those securities lose value because let's say you could buy something that's paying you 2% last year and that exact same thing is paying you 4% this year. Well, the thing that you bought last year for 2% is worth less, right? That, it sort of makes sense when you just strip it down to its bare facts. And other banks are in a similar place. But the question, I think that they have maybe managed their interest rate risk differently, or they don't have a lot of depositors taking money out. But this is one of those really subtle effects of interest rates rising that, can happen in particular to banks that I don't think everyone was necessarily focused on. Although certainly within the banking community, people have known about this. And I think a lot of banks have been trying to manage that interest rate risk so that they don't find themselves in a similar situation.
Yeah, I think you explained it really well. I think we're all getting a lesson in retail in banking and what it all means. But yeah, they invested in mortgage bonds. And, a few years ago when the interest rates were super low and now they're not low anymore, so their bonds don't look so good. So they had to sell at a discount, essentially, and then start to ask for money. And as soon as they started to ask for money to sort of make up for the discount sales, then people started to freak out a little bit. That's it in a nutshell. In my really casual.
I think that's definitely it in a nutshell. I mean, this is all about confidence.
Yeah. So, as stocks sort of tumbled on Monday, a move by the Fed to stick to there was a move by the Fed to sort of control the narrative. You talked about consumer confidence, that people immediately started to think about the last time we had a crisis in banking. So I want you to kind of talk about the difference between what we're seeing now and maybe what happened in 2007.
Right. So I don't think this is like the prior financial crisis. Then you had a lot of assets that were hard to value. They looked sort of a little bit wonky, so to speak. And people said, what's in these banks? How can we be certain of what's there? This isn't that. Banks are well capitalized. They're generally in really good shape. They've been lending and supporting their communities, for years. And I think that, what this is this is about now you talk about there's a new focus on interest rates. There's also a new focus on insured and uninsured deposits. And what does that mean? And as a business owner, where should I have my money? There's ways to do deposits where it's all insured. There's these different programs for that. And I think that the market's just digesting that. And they're wondering what companies are going to do, how are they going to reevaluate their relationships with their community banks or their regional banks. But I fundamentally think that, once this all settles and people sort of reacquaint themselves with the banking system 101s, that regional banks and community banks, there's still such an incredibly important role for them in their economy. And I think they're going to continue to be there. I know we saw a lot of moves in the stock market yesterday. It doesn't sound like there were necessarily as many moves on the deposit front, which is what you really care about if you're running a bank. And, this just feels very different and caused by something else, and in a way, hopefully a little bit easier to contain than what we had, I guess now 13 or 14 years ago.
Right. Lori Bettinger, thank you very much.
Thank you.